esperando un recorte de tipos en el mes de junio. Les contaba antes que el sector salud es uno de los sectores que están en el punto de mira de los inversores y de eso vamos a hablar en los próximos minutos con nuestro invitado. Nos acompaña Robert Milano, Senior Investment Strategist and Head of Emea Equity Business Development at Alliance Bernstein. Hello.
Hi, thank you for having me today.
Following several years of relative underperformance versus the broader market, the healthcare sector delivered a strong absolute and relative performance in the first quarter of 2025. What do you think drove the relative outperformance?
Sure. I think what we've experienced so far is a tremendous amount of uncertainty around the direction of U.S. trade policy, and that has created a lot of volatility. And what's also created is a really significant flight to safety. And I think many people recognize that the that the healthcare space more broadly is typically very resilient in market sell-offs. And the reason for that is that you have inelastic demand, you have an aging population, you have a great amount of demand for products and services as a result of your need to access the healthcare system, regardless of whether the US or the global economy is in recession. So there was this massive flight to safety, and you kind of see this in global performance, sector performance. You look at some of the best performing sectors in the first quarter, it was things like utilities and consumer staples and healthcare. And also you started to see a bit of a rotation more towards cyclicals, whereas tech and communication services has driven the market over the past couple of years. So as there's been more scrutiny around tech, and while there's been more scrutiny around demand for AI and broader concerns around the economy more broadly, I think people have flocked to healthcare for some of that, perceived defensiveness, if you will.
In the second quarter to date, healthcare has underperformed the broader market sharply in response to President Trump's executive order. What are your thoughts around the U.S. government's goal of reducing drug price in the U.S.? How impact might this be?
Yeah, it was certainly a bit of a shock to the healthcare space a bit more broadly. So Trump had put out his truth on Truth Social a few weeks ago, which highlighted the idea of there being an executive order that was aiming to drive down drug prices in the U.S. and a most favored nation pricing, we'll call it. The goal of that objective is really, or the goal of that executive order is really to help to bring prices down towards the prices paid by other developed markets. In our view, this isn't overly impactful for the broader healthcare space today. There's a lot of uncertainty around it. When we look at the executive order that he had signed, the goal really is to provide 6 months worth of negotiation for companies with the government. So there's quite a bit of runway before we see any kind of real significant change or regulatory legislative change. At the same time, he's tried this in the past and it has been challenged in the courts and ultimately was dropped. So there is some question as to which companies are impacted, which are not impacted. How does that ultimately make its way through the system? And when you look at the underlying net pricing in the US for drugs, those are actually not that far off from the lower prices seen in other developed markets. What is very high is list prices for drugs. So before rebates and reimbursements and all of that. So it's very true that list prices in the US are very, very high. But when you get through all of the reimbursements, the rebates, it's actually quite a bit more reasonable. And one of the things that we're always mindful of when we think about investing in pharmaceutical companies in our portfolio is what is the net pricing of these drugs? How accessible is it to the market? And try and make sure that we mitigate some of that risk as we build our portfolio.
Around the same time, UnitedHealth Group, a big name within the healthcare sector, has been in the media quite a bit. Can you explain what the challenges are for UnitedHealth and how are you and the team thinking about the company today?
Sure. Yeah, UnitedHealth has been in the media quite a lot. And when you look at UnitedHealth, so what they do is they're managed care. So they provide health insurance to individuals in the US. They also have their own pharmacy benefit manager, which helps to negotiate pricing between insurers and the drug companies on behalf of the patients. They've got their own network of physicians, so they've kind of vertically integrated themselves quite significantly to try and bring better quality of care to the patients in their coverage. One thing that they also do is they work with the government on delivering Medicare Advantage, which is government sponsored plans for the elderly population. And one of the things that you've seen is you've seen greater utilization of insurance over the course of the past year or so. So this isn't by any means new news. But when you look at utilization trends, they have been increasing. So the elderly population is going to the doctor more readily, using their insurance. That brings with it a higher cost for the insurers. At the same time, the government rebates or reimbursements they provide to the insurers that are kind of operating these Medicare Advantage plans came in below expectations last year and have been a bit of a headwind. So there's been a bit of a profitability challenge. That has continued to rear its head this year. There's some concerns that perhaps these utilization challenges are expanding to different parts of the business. More recently, as well, they decided to fire their CEO and kind of institute a new CEO who had previously run the business. So they've also cleared guidance for the full year. So there's been a lot going on, and then the most recent development had been the announcement of a fraud probe from the U.S. government on UnitedHealth and their Medicare business. So in aggregate, there's been quite a lot of noise. The stock has come under a lot of pressure as a result of that. The question mark for us is really around what is the strategy for the CEO who's coming in. How are they looking to achieve their longer term growth expectations of kind of 13 to 16%? We're certainly encouraged by the fact that there was significant insider buying. The new CEO came in and bought quite a lot of stock. I think it gives some confidence in the longer term trajectory for the business. But we have to get a better handle today on kind of where the business is, where the business is going, and how able they are to deliver that same level of profitability and growth that they've delivered historically. If we get comfortable with that, that could be a really interesting opportunity because the valuation has come down quite a bit. If not, then we have to reassess whether that fits our portfolio or not.
Given all the noise and the relative underperformance for the sector today, do you still think this is an attractive place to invest? And if so, why should investors consider an allocation now?
Yeah, look, I do think that healthcare is a really interesting pocket of the market. The challenge that we have today is sentiment is really poor, right? And as sentiment starts to improve, I think that will certainly create a much more interesting entry point for clients, or a recovery potential for clients. When we think about healthcare, it has this combination of offensive and defensiveness. Historically, people have bought into healthcare because of the focus on pharma. Pharma is half today of the index of what it was, call it back in 2000. I think in 2000 it was around 80% of the index. Today it's about 40%. Still a very significant portion, but what we've also seen is really significant growth in other areas like biotechnology, medical equipment and supplies, managed care companies, healthcare technology. So these areas where there's really exciting innovation, really exciting growth. And when you look at the healthcare weight within the S&P 500 or the healthcare weight within the MSCI world, it's at very, very low levels versus history. So sentiment, again, has come down quite a lot. Valuations have compressed. You're still seeing a very significant longer-term growth opportunity here, especially as we bring new novel ways of delivering treatment to patients, as we look to bring down costs for the healthcare system. Again, the challenge is sentiment in the moment. But if we see kind of sentiment begin to clear, if we happen to have more downside volatility in the market, healthcare should provide more durability, as it did in the first quarter, as the market sold off, given some of that inelasticity of demand, given some of the defensiveness that you often tend to see here. But if tomorrow all of the headwinds that are facing the sector and the market fade away, and the market continues to rally, and we see really strong longer-term growth opportunity, you have those interesting drivers of growth, especially given demographics and some of the things that we've spoken about that we believe can help to drive upside participation for the healthcare sector. So for a longer term investor, we think it's a really interesting place to be given some of the tailwinds that we've spoken about. However, if you're looking at an investment for the next 3 weeks or 3 months, it might be a bit more challenging. However, for the next 3 to 5 years, we think given the relative underperformance for the healthcare sector versus the broader market, there's quite a lot to like. But we think you need to be very selective as you look to approach the space, because winners and losers are going to be harder to discern amongst, and you have to be selective in choosing those durable businesses within the healthcare space.
Milano, Senior Investment Strategist and Head of Emea Equity Business Development at Alliance Bernstein. Thank you for joining us. Good afternoon.
Thank you very much. Take care.